Hey everybody, it's that time again. It is December 28, 2021. You are joining Gold Silver Pros for the Cowboy Medals live stream. We're broadcast from the great state of Texas and we take no BS. How is everybody doing today? We're going to let everybody get loaded into the chat, let YouTube know that we're here before we get started. Today's topic is the U.S. housing market is about to stall. We're going to talk about that. We got a lot of data points coming out the last 2 weeks talking about how the U.S. housing market is slowing down a bit, as well as a couple of points to talk about over the last couple of months that indicate, yes, the housing market is slowing down, but it's still cranking along faster than the last financial crisis. And we're going to talk about why that means we have a bigger bubble and a bigger crash ahead and what that means for you. Welcome everybody to the program. First in was Juan Crespo. We also have John Bethea. Sean Walker is here. Ralph Potts is here. Hey Ralph, how you doing, buddy? Neil Hahn has joined us. Welcome everybody to the program. We do have a poll loaded for you guys. We've got 16 votes already. What is your prediction for housing in 2022? Is it going to soar, which is a 20% up move? Is it going to stay sideways more or less? Few points either ways. Are we going to have a moderate decline in 2022? Or are we going to have a 20% or more crash? Put your vote in the poll. It looks like crash, 20% or more is leading currently 43% of the vote. Now at 21 votes, everybody vote in the poll. Let's see what you guys think is going to happen to the stock market. We've got about 40 people in here. Thank you for joining the program. Once again, this is Cowboy Medals live stream, December 28, 2021. I'm your host, Robert Kientz, the owner, proprietor, and grandmaster of goldsilverpros.com, where we broadcast from the great state of Texas and take no BS. More people loading into the chat. Jack W is here. Tom Stencil is here. 𝙎𝙊𝙇𝙑𝙊𝙎 is here. Welcome everybody to the program. We'll get started on the data here in just a moment. Remember, super chats are open if you want to grab my attention and guarantee getting your question or comment read on the air. Leave that super chat down below in the chat and I will get to it. And if you have just general questions, put those in the chat as we go along. I'll do my best to address those. It looks like we have about 50 people in the stream. We'll get more up. I want to talk housing today. Let's talk housing. A week before the new year, some economic signs this year, basically glowing red, if you will, the warning signs on our dashboard for the economy. We've had inflation. We've had supply chain shortages. We've had the Fed admitting that they're going to have to taper and raise interest rates. Whether or not they're actually tapering, we need to figure that out. My good friend Rafi Farber of the Endgame Investor says they're not on his channel. I'll try to have him on in January to talk about his view on whether the Fed will actually taper. But the warning signs on the dashboard of the economy are glowing orange, heading towards red. And now to end the year, we're going to talk about housing and why it's critical that the housing market stay up or it signals a major recession ahead. Riding Shotgun is our moderator, Michael Sayre. Thank you for joining, Michael. We appreciate you watching the chat for us. Tim Goodson is here. Robin Kelly is joining us. And Colin Gooch is here. He of the golf store. If you're interested in anything golf, ask Colin. He is your man. Shout out to him. Had a nice visit today at lunch from Ian of Arc Silver and his beautiful wife. We'll talk about that a little bit later in the program. I think we've got enough people loaded up. We've been in here for about 3 minutes. Let's go ahead and get started on the data. So I'm going to roll over to the share screen and we're going to talk about the data. Here is the U.S. economic calendar via marketwatch.com. And for today, we're going to talk about 3 data points. Today's data got announced, the Shiller U.S. home price index year over year. We had an increase of 19.1% year over year, which sounds pretty good, dating back to November of last year. Or actually, this is October's data. I'm sorry. It's a little bit more delayed than some of the other economic statistics. It's basically a 2-month delay. But dating back to October of last year to October of this year, only a 19.1% improvement. You say only 19.1%, Rob? Well, yeah, the previous month, it was 19.7. And this is the 3rd month in a row in which that index has slowed. It's still positive, but it's slowed. And we'll get into that in an article from Zero Hedge here in a moment. If we scroll down to last week's major U.S. economic reports and Fed speakers, we have a couple of more housing data points to look at. If we roll right down here to Wednesday of last week, we announced existing home sales. It was forecasted to have 6.5 million. It actually was only 6.46 million. Now from previous period, it was 6.34. So that's pretty good, but it wasn't as robust as expected from the people watching the economy, from the experts. And we roll down here to the new home sales, which is the all-important measure of the health of the economy. It came under expectations at 744,000 versus 766. Still somewhat robust, still moving forward compared to the last period, but not as strong. We're going to go over to Fred from the Federal Reserve and look at the year chart dating back to January 10th, 2020. That's about a year and a half chart, 10-1. So this is a 1 year chart. We've seen it slow down. So it was on an upward trajectory. About July started to slow down. And then the last 3 months it's been decelerating. Now it's still positive. I'm not raising the warning banner saying that the housing market's about to crash right now, but it's slowing down. And if we talk about what's happened, well, we'll get to the previous few months here in a moment. We look at the zero hedge story. U.S. home prices gains slowed for third straight month in October. That's the third straight month of slowdown in price gains. It's still gaining, but it's decelerating. The rate of gain is decreasing. Bear in mind, however, and this is the awesome point about the zero hedge article and why I love zero hedge, it's still faster acceleration than the peak of the last housing bubble. When was that? Oh, was that the 2007, 2008 timeframe, right before the Great Recession, when we had the mortgage crisis, the ninja loans, people taking loans that they couldn't afford, people giving out loans like candy, and then the collapse of the system that couldn't support itself. You're telling me, Rob, that the market is more overheated than it was back then? What does that say? It says we're probably going to have a bigger crash this time around. And what that really is an indictment, ladies and gentlemen, of the Fed policy. What have we had since the Great Recession? We had quantitative easing. We've had money printing. We've had more debt. We've had the government shoving spending out the door and massive deficits. And as you can see, we haven't solved the housing crisis. This is worse than it was before. Absolutely worse than it was before, if you can even believe that. Hello, everybody. This is Rob Kientz of Gold Silver Pros. We'll do a real quick reset on the program. This is your Tuesday live stream edition, Cowboy Metals Live, where we broadcast from great state Texas, and we take no BS. And we're telling the truth on the housing market right now. I've got a poll up, and it looks like we have about 40 votes on what's your prediction for the housing in 2022. That it soars, that's a 20% up move. It's only got 7% of the vote. Stayed sideways more or less is about a fifth of the vote. Moderate decline is about a third of the vote, and crashes is about 40%. Hello, everybody, for joining. 𝙈𝙊𝙇𝙊𝙎 is in. Sarge 27271 is in. Stray Dog at Play is here. John Bethea, I think I've already mentioned you, my friend, is here. Steve Ross Holmes is here. We have a lot of people that we see on an everyday basis. Thank you so much for supporting us on the channel and for coming to join our live streams and our videos. We have about 90 people concurrently in the chat watching the stream. Thank you, everybody, for joining. Remember, super chats are open if you want to grab my attention. If you got questions, go ahead and ask them. We are talking about the housing market and how it's slowing. I promised you I'd talk about the last couple of months of data. The last few months of data have indicated, not only in my area, North Texas, but around the US and a lot of places, that we're seeing inventory creep up. Okay, what does that mean? What does it mean when inventory of houses increases? It means that there is more inventory relative to what people want. In other words, more supply. What happens when we have more supply of anything in the economy? It means prices are gonna go down. So as we saw inventory creep up the last couple of months, we're starting to see less new home sales, less housing starts, okay, and lower or decelerating home price increases. Now, we're not at anywhere near a crisis stage right now. We're not at the peak of the bubble. We've started the peak, though, because the statistics are starting to slow down. The amount of purchases versus the amount of inventory is starting to slow down. We're decelerating. So think about a race car driver as he comes around the track. He's going for the finish line, but his engine starts to sputter a little bit and he loses speed. And the guy next to him starts to catch up, right? Will he make it across the finish line? That's what's happening in the housing market. We have a general deceleration, although it's not a crisis and it's not negative yet. But you know me here at Gold Silver Pros, we follow the data on an every single day basis, period. And I will let you know before anyone else out there in YouTube land or the financial universe is going to tell you something is a concern, because that's what we do. That's the value of what we do. We see it before everyone else. I called inflation before everyone else. I called the end of quantitative easing before everyone else. Why? We just pay attention to what they say. And that's why you come here to Gold Silver Pros. Now, we're not always right, but I think we do a pretty good job of it. Thank you, everybody, for joining. Let's see, do we have any questions? How much, Colin Gooch says, how much percentage-wise of property values expected to drop in 2022? That's a really good question. It's still, we have an overheated housing market here in North Texas because of all the immigration, because we're a pro-business state. Some areas like California and some coastal areas are seeing more downward pressure on prices. As interest rates rise, which they will due to inflation and due to Fed changes in policies, as interest rates rise, housing prices have to come down. So let's explain that dynamic. Let's say you have a house and you're financing at, I don't know, 1%, right? You pay 1% interest on that house on a compounded basis, okay, essentially. And you pay more of the interest up front than you do the principal. That's how loan payoffs work. You pay, if you look at your amortization statement, which is what the title company will give you that the bank has prepared, the amortization statement tells you how much you pay per month over your 20 or 30-year loan or whatever it is, how much a percentage of that is interest, how much a percentage of that is principal. You're paying down the original amount that you loan. That's principal. In the beginning, especially 5 to 7 years, you pay a much higher percentage of your monthly payment goes to pay the bank's interest up front. You pay interest off first before you pay that principal. That gives the bank the upper hand. So you don't earn a lot of equity in the first few years unless you overpay your loan or you take a really short mortgage term. Most people taking 20 to 30 years. Okay, so think about that for a minute. So you can afford maybe $150,000 house if you're in Texas, on the coast, maybe $400,000 at 1% interest. Well, when interest rates rise on that loan, what happens to your payment? As interest rates rise and you're paying most of the interest up front in the first 5 to 7 years, what has to happen to your payment over the same fixed period of your loan, 20 or 30 years? It must go up. So if that payment goes up, what can people afford on a monthly basis? The price must go where? The price must come down. So as interest rates rise, the prices must come down by a corresponding amount to equal the same monthly payment. Why does that matter? Because if you're in your job and you're only getting a 2% increase in cost of living every year, and we know real inflation is rising probably 13, 14%, but even the CPI is something like what, 7%? That means you're actually declining in purchasing power every year. So you cannot afford for that mortgage payment to go up. So as interest rates rise, that principal amount that you borrow, or the price of the home, in other words, that you purchase, which is the principal amount on your loan, must come down by a corresponding amount to that interest, especially because you're not building a lot of equity in the first 5 to 7 years. So to answer your question, Colin, as interest rates rise, prices have to come down. As more supply hits the market, prices have to come down even further to encourage buying. So we have two headwinds in the real estate market: rising interest rates, excess supply. That's why we're seeing the numbers start to decelerate. Okay. And this is going to increase in 2022. And I think by 2023, maybe the last third of 2022 to 2023, we're going to start to have a little bit of a housing crisis. And the housing crisis is going to be inflated inventories, higher interest rates, lower housing prices, houses longer on market, harder to sell your house. It's going to be the beginning of this financial crisis. And what's really going to make it really bad is when you start to see banks default like Lehman did, because they can't service the loans because people can't make the payments. And then the prices will crash. It's like a waterfall at that point. I predict that's what's going to happen. I think it will start probably in the last third of 2022 in earnest. It could decelerate faster in the first half of 2022, but by the last 3 to 4 months, it's really going to become obvious. Too much debt, rising interest rates due to inflation and pressures on the debt markets, too much inventory right now. Why do we have too much inventory? Because people are building like mad. Because why? Because housing prices are going up. So there's more building. In reaction to that, housing prices going up means more demand. But the time to build a house and plan the house takes time. Now, this is across the US. Some areas will do better than others. I think Texas will do better in some other states. I think Idaho is going to do excellent. I think some other states are going to be worse, where you have high general tax rates and less disposable income. Places like New York and California, it's going to crash first. Places where the property values over the last 10 years have risen the most is going to crash the hardest. So those are the things that you want to look at. All right, everybody, I don't see any super chats. Let's go back to the poll. 67 votes. 13% say real estate is going to soar in 2022. About a fifth say it stays sideways. Exactly a third say a moderate decline and crashes is exactly a third as well. That is what's going on. Thank you, Fast Eddie, for joining. Neophyte Stacker is here. We got about 130 people in the chat going strong. Do we have any other questions? 𝙎𝙊𝙇𝙑𝙀𝙍 says, does the Fed buy mortgage-backed securities? And if so, will the taper have an effect on the demand of said mortgage-backed securities? How would that affect the banks? Yes. Now, I think it was something like, I don't remember percentage of mortgage-backed securities they buy, but I remember out of the amount that they were originally reducing or tapering, about 10 billion was mortgage-backed securities and 20 billion was other securities. So it was about a third of what they were tapering in their purchases. Now, if the Fed holds true to what they say they're going to do, and my friend Rafi Faber says they're not actually tapering, he says the data says they're not actually tapering. But if they actually taper in the first quarter of 2022, like they've said they will, then yes, there will be less mortgage-backed securities bought by the Fed, which means what? Less demand for mortgage-backed securities, which means what? More supply of them, which means what for investors in mortgage-backed securities? Their investment returns come down, the prices come down. That puts pressure on the paper markets, which affects forward sales or forward mortgages, forward sales of real estate that result in a mortgage. If those prices come down, there's less demand. If investors put less money in, there's less money available for what? For selling houses. So all of this is working together, and that's why things tend to cascade. Okay, and that's why we call it early. That's why we look at the trends and we call it early to let you know ahead of time what's going on. Chuck Silver is here. Hello, sir. Back to you. Thank you, everybody, for joining. I'm looking for more questions, guys. I don't see any super chats. And I think I've answered most of the questions there. The main topic of discussion was the housing market, how it's going to slow down. We'll talk a little bit about, I think at this point, we want to talk about an interesting lunch that I had with my friend Ian from 𝙂𝙋𝙊𝙇𝙀𝙀. He came to Texas and took me out to 𝙈𝙀𝙀𝙇 barbecue, where we had wonderful brisket and I had sausage, and I mean, we had like pecan pie and all that stuff for lunch. It was awesome. And he presented me with this really cool gift I want to show you guys. Thank you so much for Ian at 𝙂𝙂𝙊𝙇𝙀𝙀 for this 1 kilogram 𝙂𝙂𝙀𝙀𝙀 Suisse 999 silver bar. Check that out. That was a gift from my friend Ian at 𝙂𝙂𝙊𝙇.com. He has the lowest price silver that you can get. And we've got the little 𝙂𝙂𝙀𝙀 assay sticker to go along with it, so I can prove that this is actually came from 𝙂𝙂𝙀. And the serial number that's on the bottom of this piece of paper matches that serial number right there. And bada boom, it's a legitimate silver bar. Thank you to Ian at 𝙂𝙂𝙊𝙇. I'm going to show you how, if you guys want, you can go get the cheapest silver on the planet. That's right. I said the cheapest silver on the planet. Let's go to our website. Now, those of you, I'm going to debut our new website here. I'm not sure if I've shared this before. We revamped goldsilverpros.com. And so we have a really cool new website. You can join our free newsletter down here at the bottom. Just put in your email, and once a week, we're going to send out a digest. We're ramping that up to start in January. We have a membership if you want to support us on Patreon. And we also have precious metals deals. If you click on that, I'm going to do that one more time for you guys. If you go to goldsilverpros.com, you click right here on precious metals deals and you click it away. And you go down here, we have several options for you. All you have to do is go here. Like if you want 99-cent 1,000-ounce bars, 99-cent over spot, or 99-cent over spot, 40% Kennedy half dollars, the cheapest, I mean the cheapest silver anywhere by premium, you can click here on Get Access under 𝙂𝙂𝙊𝙇, get access, and fill out this handy dandy form. And one of their account representatives will get back to you within 48 hours. You just put your name, your email, your phone number, what you're interested in, and how much you want. click send, and boom, it does it all for you. And they will get back to you with information on how to get that 1,000 ounce COMEX bar, 99 cents over spot, or the 99 cents over spot Kennedy $50. That deal is still running. We're the only place that has that deal. You have to get it through Gold Silver Pros, and the only way to do it is to click on that button right there. So I wanted to share that with you guys. Cheap silver, you know, we aim to please by bringing the lowest prices. We're actually trying to set up a business that would allow us to move a lot of silver at the cheapest price on the market, run it, we'll market it on Gold Silver Pros. We've got another influencer interested as well. We've got most of the back end work sketched out. So stay tuned. In 2022, we're going to hit you with even more cheap silver, so you can get your silver cheaper than anywhere else on the planet. All right, guys. All right, we do have a contribution from Dumb Money Media. He says, I was wondering, can any president, US president, tell the Fed to raise interest rates at any moment? Or is it all JP and his crew running the show? So technically, the Federal Reserve is not federal and has no reserves. It's an independent board of governors that are nominated and appointed through the government. However, they're influenced by all the private banks that own the Fed. The private banks own the stock of the New York Fed, the Federal Reserve, all of it. Okay, they own the stock of the system. And the private bankers started out like JP Morgan, all those guys. Nobody knows now who owns it because they don't publish it. Probably the same guys, Goldman Sachs, JP Morgan, those guys. They own the Fed, so it's not federal. Now, is there a board of governors that does have to answer to Congress? Yes, not the president, but the Congress, yes. But they're nominated by the same banks that own stock and run it. So basically, it's a creation of the private bankers that created the Fed. And in 1913, got it approved when everybody was on vacation and there was very few people in Congress to vote. So everybody had gone on vacation. You didn't have TV back then. You didn't have the internet. You didn't have Twitter or text. So all this, the Federal Reserve was voted in by the bankers' cronies in 1913, signed off by the president at that time, who had as his lead advisor, guess who? A banker crony. And they got the system in place. They own all the stock. They make the interest and all the money. Okay, they make the interest on all the money. They own all the value created through the Fed, and they're private. And yes, they do have a board of governors that is handpicked by the private banks and processed through government. And because it's processed through government, they say it's a government entity, it's federal. But if you actually look at their charter and their creation, they're not. It's private, baby. Neophyte Stacker says, why is silver down year to date $3 and gold $93 when $6 trillion has been printed in the last 2 years? A pandemic is present when. All right, so you're looking, see, Neophyte Stacker, you're a smart guy or gal, because you're looking at all the economic data and you're saying, where the hell are the precious metals? Well, I'm here to inform you. If you go back and look at the history of the last year of the channel, we have published probably 30 or 40 videos that kind of explain this in detail. And we'll do more. I want to do it again. We're going to do it again and again and again. I'm going to come back and probably sometime this week, Wednesday or Thursday, go back and look at the COMEX. The spot prices in the US are determined in collusion between the London OTC market and the COMEX here in the US. Mostly it's the COMEX here in the US, but the London OTC does affect it and they talk to each other. There's even an arbitrage played between the two of them called EFP, or exchange for physical. Okay, so there's a connection between the two. For the most part, I just follow the prices of the COMEX. It's very close to the actual spot price, and it's determined by something called derivative trade. Derivative trade is 90% speculative, not legitimate price hedging by the producers and manufacturers. We've proven that 100 times over. It's speculative, so they can short it, they can go long, and they control the price. That speculation, that gambling market, determines the spot price. So the only time in which that really moves is if there's a severe economic event. Then you see it move, and it can move for years after. If you look at the economic event in 2008, 2009, the Great Recession, gold hit its peak in 2011, 2.5, 3 years later. After that, what was it, 1901, $100, $1,900 an ounce. And then because of the quote unquote pandemic we had last year, gold hit 2060 something last year. So when we have a major economic event, it moves wide because the derivative traders are betting that the future price of gold is going to move. It has nothing to do with physical supply and demand. It has nothing to do with underlying economic data. It has to do with what speculators are betting it's going to be in the next 2 to 3 month forward contract. That's it. That's it. It has nothing to do with physical trade. It has nothing whatsoever to do with economic deficits and stuff like that. Hopefully I answered your question. Thank you for the question. I appreciate you very, very much. 𝙂𝙊𝙇𝙑𝙀𝙍 says, could the big corporations buy direct from producers and absorb all future supply, ending access to retail? Yes, another one of the things I'm doing is trying to set up a way for the manufacturers to get it straight from the miners. And if we make progress on that in 2022, I'll let you guys know. Dumb Money Media comes back in and says, I guess it's better if it just happens naturally through total fiat destruction. Merry Christmas, Rob, team, and everyone here. Yes, Merry Christmas to everyone. Happy holidays. Happy New Year's. Hope you guys had a great Thanksgiving. Thank you so much. I was out on vacation last week. We had a lot of great content on the channel last week. We replayed this awesome interview with Argentinian peso currency crisis survivor, Fernando Aguirre, in 2 parts last week. We also had me doing a Q&A from Silver Symposium and some other stuff on the channel while I was out on vacation. We're back doing live and raw content for you this week. Thank you everybody for supporting us last week. Steve Ross Holmes jumps in. Maybe the Fed is not as dumb as we think. Maybe we just don't know their motives. If there's a motive is central bank digital currency, CBDC, then a crash, create the fear and acceptance. That's 100% correct. Steve Ross Holmes, you win a gold star. I wish I could virtually reach out to you and pin the star on you or do something for you. You're 100% correct with that comment. Thank you so much for the support. They're not dumb. It's planned. They know what's coming. They can't tell the public why, because it would panic and crash the market ahead. They're going to manage the sinking of the Titanic, as I've said before. They got to manage it down. And yes, Powell knows. And yes, they all know. And dating back the last 50 years, I would have said they should have told the truth. Now, if they told the truth, it would be mass panic, fear, crashing, people starving starting tomorrow. If they came out tomorrow morning at 8 o'clock and said and told the truth, by 5 p.m., everything would be Armageddon economically here in the US and around the world, because I think the US dollar is still the world's reserve currency, if in name, if not necessarily in actuality. So that's why they won't say it. Neophyte Stacker with a contribution. You're welcome, sir. Hopefully I answered your question. Thank you for contributing to the program. I appreciate you very much. Lead miners are the new gold, says Neil Hahn. Explain that comment, Mr. Hahn. I'm intrigued by that comment. Explain it in the chat. Mexico Move asks, how will the Basel III agreement affect gold? It will affect it, but as I've said, I did 4 or 6 videos, I can't remember, starting in early summer when Basel was first a focus. Actually, I think I started this in like March, talking about Basel III. And what I figured out through analyzing that and talking about it and talking with other people and going back to those documents a bunch of times from the BIS, Bank International Settlements, is it's designed to capitalize the banks, particularly the central banks, but also the commercial banks and the banking system. But it's not going to be a direct link to the central bank digital currencies or the paper fiat currencies. It's not, it's just not. And it's just going to be for the rich people to have a real asset of value. I don't think it's going to crash the gold and silver derivatives markets, although I think it's going to affect it. I think some banks are going to have to get out of the trade, especially in London. And I think it's going to put a floor under the gold price and put pressure on an upward rise in the gold price. I don't think it'll break out. I think gold breaks out when we hit our next financial crisis. That's when gold will break out. But I do think Basel III is a realignment of the trading centers for gold. And it's a recapitalization of the banking system using gold as one of the high quality liquid assets, or HQLAs. Good question there. Hey, everybody. Deeps is here. Butch Michael is here. Who else do we have that's new in the chat? Farhan K is here. Thank you, everybody, for joining. We were talking about real estate. Just to recap, we looked at the Shiller data showing a deceleration in home prices year over year. We showed that new home sales and what else were trending or slowing down. It was new home sales. What was the other piece of information that we looked at? New home sales from last week and the existing home sales. So new and existing home sales came under estimate. They're still positive, under estimates. Home prices are coming down. I talked about in the last few months where we had increasing inventory and deceleration of price increases. So we're at the very beginning of the pressure in the housing market. It hasn't manifested in the mortgage-backed securities. It hasn't caused a Lehman bust yet. You know, we're not back to 2008, 2009 just yet, but because it's so much bigger this time. The crash is going to be bigger. So I'm telling you, as soon as I see the cracks start to form in the housing market dam, so that you can pack up and move your belongings before the dam breaks, the wave comes and destroys everything that you own. I want to tell you ahead of time, because that's what we do here at Gold Silver Pros. Wanted to also remind you that I got a pretty little present from Ian at 𝙂𝙋𝙍𝙊𝙎. Met him and his beautiful wife today for lunch. Thank you so much for taking us to 𝙎𝙄𝙀. And this bar is an awesome little gift from those guys. Remember, you can get Kennedy half dollars, 99 cents over spot, and the 1,000 ounce Comex bars, 99 cents over spot. You won't find it cheaper anywhere else, I promise you. Just go to our website and click on the Arc Silver link, and they will help you out. Fabricio Rodriguez says, hello from Canada, Rob. Hope to meet you in person sooner than later. Thanks for the content. I'm so glad you made that content. We were going to go to 𝙂𝙊𝙃, Vancouver Resource Investment Conference, January 16th to 17th as a speaker. We were invited as a speaker. We were super proud. I was going to talk about gold and silver. This time it's different, but it's been moved to about mid-May because of COVID restrictions. They're having a hard time getting that in-person event there. So I will definitely be in March in PDAC. If PDAC goes on in March, I will be in Toronto. If you want, you can meet me there. I'm not sure what city in Canada you're in. But in May, if 𝙂𝙃 is still on, I'm going to go and be in Vancouver. So expect me to be up in Canada. Now for you guys, I have an awesome, super exciting opportunity for you guys to come see me in person. So listen up. We're doing something in person, and we're doing it with our good buddy, Economic Ninja. In fact, I'm going to tell you the guys that are going to be coming. Let me scroll up. I'm in charge of picking the place, by the way. So I'm contacting breweries and places to get us a place where we can fit. We already have 40 people committed before we even announced it. Ninja and Joe Brown of Heresy Financial announced it on their channels today. And we already had 40 people committed before we put it on YouTube. I'm announcing it on our channel right now. January 8th, Saturday in Denver, Colorado, we're going to have an in-person event to meet and greet all of our wonderful subscribers. If you're out in the Denver area, join Joe Brown of Heresy Financial, the Economic Ninja, Jim Lewis of Wall Street Silver, myself of Gold Silver Pros, Chris Taylor of Financial Fitness, and Dave Kranzler of Investment Research Dynamics. Ladies and gentlemen, that's an all-star lineup, and it's not going to cost you anything. You can come out and have a couple of beers with us, order some lunch or dinner. Again, we'll announce as we get closer to January 8th, a place that has room for us. I will let you know. I've called a bunch of places today, and because this keeps growing and we get more people interested, I'm having to change venues. I think we're going to blow past maybe 100 participants in this thing before it's all said and done. In fact, we may have to close the whole restaurant down at our event, because if you look at all the subscribers we have together, we may be sitting at 500,000 people that subscribe to all these influencers on YouTube. And it's going to be awesome. All we're going to do there, guys, it's going to be it's not going to be sponsored. It's just going to be an event for the people, for the subscribers, for anybody that can make it to Denver, who lives in Denver or lives in Golden or Colorado Springs and wants to drive up. We'll be there. I know the date. Save the date, January 8th. That's not long from now, guys. That's Saturday, January 8th. That's a week and a half. We will be in person, myself, the Economic Ninja, Joe Brown of Heresy Financial, Jim Lewis of Wall Street Silver, Chris Taylor of Financial Fitness, and Dave Kranzler, Investment Research Dynamics. Come join us. We're going to have panels. We're going to be recording content. We're going to be taking your questions. We're going to be talking to you eyeball to eyeball. We're going to be mingling around and meeting you guys. If you want to come see any and all of us, January 8th, Denver, Colorado, save the date and make your plans. We will be there. And once I find a big enough place to house us as we're growing, we'll actually tell you where it's going to be. It may take me a day or two. Like I said, I called 4 places today, and all 4 places, by the time I was done with figuring out how many people we're going to have, I had to turn them all down. So I got to find a bigger venue. If you guys are in Denver, Colorado, and you know somewhere close to Union Station, we want to keep it close to Union Station so people are traveling can get there very easily. If you know a great place to have about 50, 60, 70, maybe 100 guests, place to have drinks, have some food, eat, drink, and be merry. Place that has good sound and acoustics, because we're going to set up some mics and some cameras and record the whole thing in Denver. Send me an email at Robert@GoldSilverPros and just let me know in the chat, or let me know in the comments below. I leave comments. If you're in Denver, or you've been in Denver recently, you know a place that sounds good for us all to meet, let me know, because I'm running around trying to find places, and we keep growing this thing outside of we're going to try microbreweries, and we've grown out a lot of those. So we're looking for we'll find something. Our backup is going to be the hotel. By the way, we'll be staying at the Embassy Suites. We'll release all that information for you guys, so you can make your travel plans as they become clear. I promise I will let you guys know. We'll also send out an email ahead of time. So if you're on the email list on the website, pay attention to that. Also, a bit of housekeeping. We are revamping our email list. We're basically taking all the emails, thousands of email subscribers we've had for the last few years. We're sending out an email revalidation. We want to know which of you is still there and listening to us and wants to continue to get information, because we're revamping our newsletter into a weekly, where we're going to put a ton of helpful information in a free weekly newsletter, one email blast that's coming out. So if you guys want to have access to that email, we're going to re-email everybody that's already signed up, and you can say, yeah, we definitely still want to be a part of Gold Silver Pros and the new value added newsletter going forward. And remember, ladies and gentlemen, remember that if you want to apply for the first time for free to be on our email newsletter list, you go to the website goldsilverpros.com and you click this link right here. Join our free newsletter. And all you do is stick your name and email in there and hit submit, and we will add you to the email list, and you will get weekly our email digest, as well as every once in a while. We're not going to spam you, but every once in a while, we'll send out special notices, such as we get a special bullion deal like we have with ARC Silver or with Miles Franklin. We represent those companies as well. Well, we're not paid representatives, but we work with them to bring you the best deals. And hopefully, that does well for you, and you're able to get your gold and silver at the lowest prices possible. So we'll email special deals every once in a while. Looks like the poll ends up going back to our topic. The U.S. housing market is beginning to stall. It's decelerating. We see that clearly in the data. What's your prediction for the housing 2022? 1/3 of people said it crashes. 30% said moderate decline. 22% stays sideways. 12% says soars. I think that's a pretty good answer. Neil Hahn says, I'm not here, Rob. Too late. I know you got the weed, and I know you're pretending not to be here, Neil, but I saw you. It is too late, my friend. You cannot get away. Dave Cransler's house. That's a great answer by Grow Mechanic. I'm not sure we could fit. Maybe in the backyard. I have to ask how big of a lot Dave has. I'm sure his wife would love us descending on his house and doing a massive subscriber get together. That'd be a lot of fun. I'm just reading the comments, seeing if there are any questions here, guys. I don't see any new questions. Thank you for everybody that came into the super chat and asked questions or showed support. And I think we've answered all the questions in the chat. So I think we're gonna make this relatively short today. Oh, Jake Perigo says, hey, Rob, thanks for the Black Cowboy hat, no BS live stream. You're welcome, sir. Broadcast from the great state of Texas, Cowboys Medal live stream. We get no BS. The value, somebody told me today, a good friend of mine said, Rob, I watch a lot of YouTube channels, and you do more detail than most people. You and one other guy he mentioned, do the most detail, and you're not fluff, and you're not clickbait. You're really here to educate us, and I appreciate that. And that's what we strive for. Honestly, we do. We strive for no bullshit. We strive for providing you the best information. We strive to be the first on the scene. We're not perfect, but I think we've done a pretty damn good job. We helped expose the Perth Mint, thanks to my good friend Daniel Vigario. We've helped exposed the derivatives markets, a lot of the shenanigans going on in gold and silver. I think we've offered a lot of value. I think 2021 was a great year for us, especially because you guys kept coming every day, and we appreciate you. Honestly, you guys are why I do it. If you guys weren't here, why the hell would I be doing this, right? That's all for you. Everything we do is for you. I think 2021 was a great year. We're going to have a series of ridiculously awesome announcements in the first and second quarter of 2022. You guys just have to wait and see. There's so many opportunities that we're going to provide you. So much more service, so much more information, so much expansion, so much deals. If you want precious metals or good mining stocks, all that stuff is coming. We had the benefit of growing 10 times from 2020 to 2021. We grew 10 times this year in terms of subscribers and revenues, to where I could actually hire employees and quit my full-time job and do this full-time. Now what we're going to do is give back. All of that we experienced this year is coming back to you in 2022. I promise you that. I will make you this promise. We're going to bring more next year, and we're going to make some huge announcements. And wait till you guys see what we have planned. We're going to blow this fucking thing out. We're going to blow it out. We're not just going to focus on gold and silver. We're going to do wealth and risk management. We're going to tell you about real estate and stocks and things like that to help you. Because when this gold silver market flips, you're going to want to buy cheap stuff. The houses are going to be cheap. The stocks are going to be cheap. Okay. Lots of things are going to be buying opportunities. So we're going to start ramping up in 2022 how to do that. Stay tuned. You guys are going to love it. I promise you. You're going to love what we have in store for you. A lot of people don't know this, but I had a lot of Series 3, 6, 63, 7 government licenses on how to do stocks and insurance and Forex, commodities, all that stuff. Also owned and sold and ran 2 real estate businesses for 18 years here in North Texas. So I've got experience doing that. A lot, and I have 25 years in corporate field and various risk management roles, including audit, including cybersecurity, including consulting and business process development, those types of things. All of that is coming to bear in 2022. To thank you guys for everything that you've done for this channel this year. I cannot tell you how much I appreciate it. I know I'm waxing on about this, but I really do. As we get towards the new year, I want to put the focus back on you guys. The focus is not on me anymore. It's about you. It's about how we can help you and what we can provide you. I promise you, next year is going to be an absolute blowout year. Stay tuned to the channel. It's going to be a hell of a lot of fun. Thank you, everybody, for joining the program. I'm going to go ahead and get ready to sign off. Time to go spend some time with my son, make him dinner, maybe watch some television, just enjoy our day. And we're going to have a good night. Thank you, everybody, for joining the channel. Stay tuned this week. Andy Scheckman is coming up this week, and I've got a special surprise for you this week as well. I'm not even going to tell you what it is, but it's a super special surprise. Stay tuned to the channel. It's all a coming. And then in January, dude, I have got some awesome guest book. Awesome guest book. I'm not even going to tell you who they are, but they're so awesome. January is going to be a blowout month for content in terms of interviews on the channel. You guys are going to love it. We got some new people coming. We got some people coming back who are some of our all-time favorite guests. It's on its way. Stay tuned. We're going to blow it out in January. Guys, I will be back later this week, and we will move forward confidently in the new year with the best information and the best subscribers. Thank you guys very much. Until next time, this is Rob Kientz, Gold Silver Pros. Keep on stacking.